Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at a pattern recognition which is utilized to see if there is any indecision in the market after having seen a trending market scenario. So this is the chart for the USD JPY with the each candle period defined at hourly. Prior to getting to the chart pattern, we also have one new development released by the platform developers where we can find the hot and happening stocks for the day. So all you have to do is go to this view option, and from that you will get this new option of hot list, and whichever stocks are buzzing for that day, which are having larger decline or larger rise compared to the average moves, we get this hot list here. So if we look at the list now, we have these stocks like Webuild Spa, which has gained more than 2 percentage point, and in decline also we have this list where the Grupo Mexico is declining sharply with decline of almost 2 percentage point here. So whichever stocks are happening in that particular session, those stocks will be listed here. These are Mexican stocks, and some of it are from other countries as well. So if the US markets were open, we would have seen US stocks also featuring here. But since we have US session holiday, there are no US stocks. Now let us get to the pattern recognition. Here there is a chart for the USD JPY. And for finding this high wave candle, all you can do is do a quick search, type in high, and you will have it. Or if you want to know where this formation can be found, all you have to do is go to this add indicator option. Here you get this pattern recognition, which has this long list. Okay, and if you want to know where is this high wave formation, here it is just below the harami cross pattern, high wave candle. All right, now as the name suggests, this is the candle which is making waves, and quite larger waves at that, as it has a long upper shadow and long lower shadow. That's why it's called high waves, because whatever price moves happened during that particular candle period, those moves were not really sustained, just like the waves which keep rolling. So in this candle period also, the price kept rolling with the move first, or maybe whichever move can happen first or later. So the move happened on the higher side as well as on the lower side, but that sharp move was not really sustained, and we saw there is a reversal towards mean, creating a long stick on either side. So we got this shadow on the higher side as well as on the lower side, whereas the closing and the opening price are not really apart. And now the question is, how long shadow is long enough? Because in market everything is relational. We have always to look at what is happening currently in respect of the past price moves, so that we get a good idea of how the things are likely to shape up in more coming hours. So for that context, we have to see and we have to consider this prior candles average price. Maybe the indicators like ATR can also be utilized to that extent for figuring out how much is good enough for considering this shadow, the upper as well as the lower shadow of the candle, to be good enough for deep dive into the market. Now, if we consider this pattern recognition while looking at the prior formation, it is better to overlook it. It is also signifying the indecision in the market. The buyers as well as the sellers are not really able to push the price in a decisive manner in any particular direction. So whatever has happened during that particular candle period, it is not really creating any sustainable impact, and we will have to then await for further signals. Now, coming to the use, how you can utilize this formation to look for the opportunities, that is the most important question. Because if we have seen significant price moves on either side, if we have seen these bullish moves in the prior hours leading up to the high wave candle, and after that we see this high wave candle formation, so that means whatever moves have happened, now the market has reached in a state where the indecisiveness is prevailing, and that is suggesting that the prior move might be ending, the uptrend which has been there in the price move might be ending, and this might be the time to close the prior trade, the profitable trade if you were in the long side, and if you are in the losses, even in that scenario it is better to cut losses short and get out of the trade. And if the prior price moves were bearish, and then this indecisive candle, the high wave candle is forming, you can take it as a signal of the end of the prior trade, and go for the closure of the prior trade also. That can also be done. Now that is talking about closure of the prior candle, but we always have to look for the initiation of the trade also. Now how this candle can help, maybe for that we will have to consider the prior average price and average volatility of the candle, and then if we see that the shadow is larger, the price moves in the current candle are larger compared to the prior historical average range, in that scenario I think it is better to go for the initiation of the trade, depending on how things had shaped up prior to the formation of the high wave candle. Now, if the prior moves were bearish and we have this high wave candle formation with enlarged range, I think that can be utilized for initiating new trades. If in the next couple of candles, or even you can pay attention to the very next candle, if you see the signs of price reversal, then the new trade can be initiated, just like what happened here. This shadow of the candle is quite large compared to the prior price moves here. So if we simply take the average price moves, it is quite good enough, but not here. It is not really good enough. It is quite shallow. The price moves were quite shallow. Same is scenario here as well, and here as well. So you will have to take all these factors into consideration. In this scenario, the shadow is long enough, but in next candle we are not really seeing any signs of reversal. Rather, there is this continuation formation, so it is better to sidestep any kind of initiation of the trade, a new trade. So you will have to discern these uses of the candle formation. You will have to decide, you will have to omit some of the possibilities, and also try to utilize these high wave candle formation in context of larger price developments. Maybe you can also take help of other trend identifying factors like moving averages or any particular setup, and with that you can use this high wave candle formation for optimizing your setup, and looking for getting more out of the market while risking not much. So that can be your approach while dealing with this high wave candle formation. So let us see now what we can do in terms of customization. Coming to the editing option, there is nothing to be done in respect of the input, so this whole option has been disabled. Coming to the output, yeah, of course we can do with the output. We can go for a color combination of our choice. Suppose if you like brighter colors, maybe there is your chance to go for optimization the way you like it. You can go for these two styling combinations here. This candle is now shaded in your color choice. If you want to simply opt for bracketing, you can do that as well. Transparency factor can be increased or decreased if you want to make it look less prominent on the chart. That option is also there. Advanced editing option, recalculate on new candle only as there is a single candle formation. That is not really going to create much of an impact. It will be done the same way regardless of this option. Highlight the time period zone. Since there is a single candle formation, your single candle is going to be highlighted, and same thing comes to this recognition pattern as well. Custom data, we can't calculate it. Show indicator on all the periods. Suppose if you want this pattern recognition to be available to you whenever you change the charts candlestick period, you can do that. Else, if you want to have it on particular candle period but not on others, you can go for that kind of setup as well, and you will have to disable the show on all candle periods and opt for specific candle periods so that you will have it only on particular candle period, not on others. It is taking much time to load. Maybe the internet is slow. Okay, for 4 hours it has been plotted. Now, if I go to the editing panel, here I'm having again this editing option. All right, 13 minutes and 50 minutes, 30 minutes and 50 minutes. So on 4 hour time frame, you are no longer seeing high wave candle formation. Same thing is applicable for hourly and 30 minutes. 30 minutes you will see that this high wave candle formation is again back in play. Here it is. Okay, so that's how these editing options work, so that you have ease of use and also the utility factor. You can have multiple indicators available on different candle periods so that you can take more data points into account while making a trading decisions, while at the same time keeping the chart clean. It is not going to get too cluttered for your eyes and also for your mind. So that's all from my side for today's session. If you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. So thank you all for joining in. Have a fabulous time ahead. See you next time around with a different candle formation. We will be considering how we can utilize these candle formations to devise profit making manner and setups. So thank you all for joining in. Have a fabulous day, a profitable day ahead. See you tomorrow.